Log this. And also, my experience, I also feel like personally, audit evidence is one of those areas of the syllabus that you can easily pick up easy and free marks. Because it takes you less time to come up with those procedures, especially if you know them already. It's going to take you less time to come up with procedures than every other area of the syllabus. So it's one area that you should be planning to maximize on. Okay.
Hello.
Yeah. Sorry, I have to quickly take a call. Okay, so I've sent the question to you guys in the WhatsApp group. So that's the question we're starting with. So I'm going to share my screen shortly. So now, as usual, you always have a requirement, and this is a question that tests a couple of things. It's primarily on receivables, but it tests your knowledge of receivables and also limits procedures to certain assertions. So now the first question says, describe the steps the auditor should perform in undertaking a positive receivable circularization for dashing code 4 marks. All right, so describe the steps. So some might find this tricky, but if you've been practicing, it should be easy for you. Essentially, what are the steps you take as an auditor if you want to carry out a receivable circularization? In this case, they've told you if they want to carry out a positive receivable circularization for 4 marks. Requirement B says, describe substantive procedures other than receivable circularization. So they told you here, don't say anything about receivable circularization again. Aside from receivable circularization, describe substantive procedures. Other than receivable circularization, the auditor should perform to verify each of the following assertions in relation to dashing codes, receivables. So these are the assertions the examiner wants you to focus on. Number one is accuracy, valuation, and allocation. We have completeness. We have rights and obligation. And you can see the total mark is physically between each part. So for 6 marks, that means for each of them, you need two procedures each. And requirement C says, describe substantive procedure the auditor should perform to confirm the redundancy provision at the year end. So you're going to see the redundancy provision above when we read the story. And D says, discuss the issue and describe the impact on the auditor's report, if any, should the issue remain unresolved. That's for 5 marks. So in this question, you're going to get marks for discussing the issue and then describing the impact on the auditor's report and the types of opinion that will be issued. Okay, so now let's look at the scenario. So it says Dashing Co manufactures women's clothing, and its year end was 31st July 20x7. You are not the supervisor of Johnson & Co., and the year-end audit for Dashing Co. is due to commence shortly. The draft financial statement recognized profit before tax of $2.6 million and total asset of $18 million. You have been given responsibility for auditing receivables, which is a material balance. And as part of the audit approach, a positive receivable circularization is to be undertaken. At the planning meeting, the finance director of Dashing Co. informed the audit engagement partner that the company was closing one of its smaller production sites. And as a result, a number of employees were made redundant. A redundancy provision of more than $10,000 is included in the draft financial statement. So for the first requirement, what are the steps the auditor should take in undertaking a positive receivable circularization? Okay, so does anybody want to make an attempt? So if you raise up your hand, I'm going to see it. Okay, I have someone's hand up. Please go ahead.
Okay, I would say that audit
Yeah, go ahead.
say that Johnson and asked for.
I can't hear you. So you
Yeah,
are
can you hear
mute.
me now?
Speak up, Olamide. We can't hear you.
Hello, hello, hello. Can you hear me now?
Yeah, your voice is very low.
Hello, can you hear me now?
Yes.
Much better.
Better, not the bedroom voice.
Can you? Okay, sorry. Okay, I would say that Janti and Co. They should seek for permission maybe earlier before they can undertake a positive receivable circularization. They should seek permission from the audit client before they can take a positive receivable circularization. That's my first point. Then I would say that when they are sending out the circularization, it should be the letter head should be in Dashi Co's name. Then I would say that when the
Make that close letter.
yes, Dashi Co's letter head, then I would also say that when they want to maybe get the response, it should go to the audit firm and not the client in a maybe in a in an envelope or in a document. Then I would say that what else? I would say that if there is no response, then they should follow up maybe through phone calls or maybe sending the circularization again. That's if there is no response. But if there is response, then they should compare it with the receivable balance. That's the one that the audit client has. We should compare it and investigate any discrepancies. That's what I have to say.
Okay. Okay. Good point.
That's Olamide. That's what you're
Eunice.
doing.
Yeah. So you guys are confusing me. Are you using the same account? I know you guys confused me last week.
Don't mind that she has told me to, maybe it's me that I'm sending out to every day. I don't know. She's using my laptop. I'm using my phone.
Okay, I see. Okay. So I did raise your hand up as well. Because I'm seeing one that they're doing. I don't know if it's see Olamide.
No. My hand is not up. Oh, don't worry. When my hand is up, I'll voice out. It's not me.
Okay.
It's Olamide.
Okay. Eunice, go ahead.
Okay, so I would say that first thing we should get the listing of all the receivables that agrees to the general ledger. Then once you confirm that it agrees, then you get, as Olamide already stated, that you get the complete, you get assurance from all the clients to get to provide secularization requests to the vendors. And then you prepare it on the letterhead of the client. Then
Okay.
you are stating in the secularization for them to confirm the balance that the client has already given to you.
I can't hear you. I don't know if I'm the only one. So they should do what?
So I said that requesting for the vendor to confirm the balance that has been stated on
Okay.
that secularization, which is why it's a positive response. I think that's okay.
Oh. Okay. Okay. That's a good one. So that's a good one. So I got so your points are brilliant answers. So that's a good one. So so just to cap it off, so typically the steps that are that are involved in kind of terms of confirmation would include, and by the way, if you hear the word confirmation, secularization, they are the same, they mean one and the same thing, right? Or if you hear the word external confirmation, we're talking about the same thing. And if you also know that external confirmation does not apply to receivables alone, you can use it for anything that involves you confirming directly from the third party. And auditors like to use external confirmation as a strong source of auditor evidence because it is coming directly from the third party. So it's always a stronger type of audit evidence for the auditor. So now the first step involved in kind of just secularization or confirmation is for the auditor to, let the clients know that they intend to carry out a receivables confirmation, right? And then the other steps is for them to, make a list of or select a sample of receivables to be secularized. So now in selecting this sample, they need to pay attention to old balances, new balances, and balances that have credit balance. So there are some balances that were very old, right? So those are the types of transaction that will be part of the sample that will be secularized. So old balances, new balances. New means like balances that that don't have any transaction yet. They are still part of the balance, the receivables secularization, and the receivables balance. And the negative balances. Negative balance is more like instead of the customer owing you, you are the one owing the customer. So all of those kind of balances should be part of receivables secularization. And also, then a letterhead will be done, right? So you prepare the letter, you prepare a letter, circulation letter. One key thing you must know is that circulation letter must always be on the client's letterhead, and it must be signed by a senior official of the client. So it can be signed by the financial controller or the finance manager, or it can be signed by the CFO, right? But the key thing is that the letter must always, the circulation letter or the confirmation letter must always be on the client's letterhead. It cannot be on the auditor's letterhead. It should always be on the client's letterhead. And the letter should always be signed by by a senior member of the client. And also, the letter must state that responses to that circulation letter should be sent. Yes, please. Hello? You have a question? You're saying something, I cannot hear you. Hello? Okay, so let's go ahead.
As regards
Uju,
can you hear me?
Uju, I can hear you now. I didn't hear
Yes.
some of the things you said before. Can you go ahead now? I didn't hear anything that you said before.
Okay, can you hear me now?
I can hear you now. Hello? Okay, your network is very bad.
Question. Your network is poor.
Yeah. Okay, so back to what I was saying. Yeah, so now the letter must always state that responses to that letter should be sent directly to the auditor. So typically it will include the auditor's email address and the auditor's physical address, right? So responses can be sent electronically, or it can be, a letter can be dispatched to the auditor's address. But the key thing with those circulation letter is that it must come straight to the auditor. It shouldn't go to the client first before the client now give it to the auditor, right? That would have defeated the purpose, right? And also, the circulation letter must always be sent by the auditor. So that's like the next step. The auditor will send out circulation letter. So it will not be sent by the client. The auditor must send it out, those letters by themselves. Even though it's going to be on the client's letterhead, it's going to be signed by a senior member of the client, but the auditor will send out the circulation letter by themselves. And usually, the auditors will expect responses to those letters. But when no responses are received, the auditor would send, they can do a follow-up email or a follow-up phone call to the customer to respond to the circulation letter, right? And for the ones that they receive responses, the auditor will, reconcile them to the balances. So essentially, once they get a response, they will confirm it to the balance that the company has in their books as at the end. And for the ones that no response is gotten, the auditor might need to, after several follow-ups, there's still no response, the auditor might need to consider to use an alternative way of carrying out the audit procedure. Okay, do you go ahead?
Sorry, Mr. Joel, I wanted to find out on that part that if you don't get a response from the customer, you understand. So do they usually, or does it make sense to include it in the letter, in the circulation letter that is going to the what do you call these people now, to the customer, to say that if we don't receive a response, or if no response is provided to this inquiry or whatever that we are sending to you, that it will be adopted that whatever it is that we have stated is in line. Does that make sense, or we'll just leave it blank like that?
Okay, so this question has triggered two things. So first thing is the difference between the positive circularization and the negative circularization. And the second thing is the fact that what is the purpose of kind of the circularization? The purpose is not to threaten the customer that to respond, otherwise the auditor will just write any balance that they like. The purpose of the auditor is just to get an independent audit evidence on the balances, on the receivables balance as at the end. So first question is, if you can say in the letter that if you don't get a response, you'll be forced to conclude whatever their balance. Now, typically, the circulation letter does not say that. It pretty much would tell the auditor, would tell the client to confirm the balances that is owed to them. Now, circulation letter you can either choose to include the balance that the company has in their books, right, and tell them to confirm, that they agree with that balance, or you can just leave the amount blank and tell them to confirm the amount that is owed to them and let the client or let the customer provide the balance that they have in their own books. So typically that's how it works. Now, there's a difference between a positive and a negative circularization, right? And who knows the difference between positive and negative circularization? Even you doing, you should know, you should probably tell us the answer now, since you are the one that asked the question.
Mr. Joel,
Yeah,
I don't
so
know it. So
Okay, so anyway, so we're going to
positive,
say it.
positive,
Yeah, I have Biodu.
so positive circularization, kind of circularization where a auditor requests a client through clients to get a response from third party, whether negative, whether they agree with the balances or otherwise, there has to be a response. Or negative circularization is such a circularization whereby the third party only respond where there's a conflict in the balances.
Okay, so you have said it. Yeah, just use a lot of English. I know it's a conflict. So, but you've said it. I mean, your answer is very correct. Okay, so let me just add to what Biodna said. So, in a positive circularization, this is where the auditor is asking the customer to confirm the balances that they owe the company as at the period end. So they are going to confirm the balance, whether or not they agree or disagree with the balance. They are going to confirm the balance in writing back to the auditor. Now, for negative circularization, the auditor would ask the customer to only respond if they disagree with the balance that the auditor has stated in the letter. So essentially, you're only responding by exception. So if you only respond if you disagree. So if you don't respond, then the auditor is going to assume that you are okay with the balance. Right, so that's a negative circularization. Now, because of this problem or because of this limitation with negative circularization, it's not always used in an audit, right? And the ISA only allows you to use it when, number one, the risk of material misstatement over receivables is very low, and number two, there's no reason why you feel like the customer will not want to respond. Because the problem with positive circularization is that you're going to assume that if the customer does not respond, it means that the customer is happy with the balance. Whereas it might be that the customer did not even get the letter on time or did not get the email on time, or the customer was just even too busy to respond, and not that they necessarily agree with the balance. Right? But the nature of negative circularization is that if the customer does not respond, to the letter, it means that the customer, is in agreement with the balance. If the customer responds, then the customer will be responding only if they disagree with the balance, right? So that's between positive and negative. So you should know that in case you see negative in your own exam. So we've pretty much gone through the steps to give a positive receivable circularization. And it's the same steps that will apply, whether it's positive or
Hello,
negative
sir.
or any circularization
Yeah, I
letter
have a
whatsoever.
question.
Yes,
Hello,
please.
sir. Yes, sir.
Okay,
Please,
go
can you
ahead.
quickly run through that? Please, hello, sir. Can you hear me, sir?
Loud and clear.
Yeah, please, sir. Please, as a form of summary, sir. I'm just to be able to conclude. Sorry, sir. The summary of those steps to get the circularization. The number one is to send a permission
Okay,
through a
so
client.
I'm going to, yeah,
To get
so
the summary.
I'm going to show that. So maybe I should just show that now. So I was supposed to write it, but so these are pretty much, some of the steps you carry out. So obtain the consent letter from the client. Essentially, you discuss with the client of an intention to circularize the customer. And then agree receivables listing to sales ledger. So essentially, you obtain a receivables listing and you're checking it to the sales ledger that he agrees. Then you select the sample. So your sample should include new balances. Sample should include new balances, old balances, credit balances, and large balances. Okay, and preferred letter on the company's letterhead. Letter should always be sent by the company's auditor. Where there's no response, perform alternative procedure. And for replies that were received, reconcile and investigate difference. So these are the typical steps. But remember, in this question, examiner only asks you for 4, I mean, there's only 4 marks. So if you state 4 steps, you're going to be fine. You don't necessarily have to list all the ones here. This is just for your knowledge in case they tweak this question and ask you something else in the exam.
Okay, so sorry.
Okay.
Are we?
Yes, please go ahead.
Now, please, okay, can you hear me? Please, why are we agreeing, say, receivables listing the sales ledger when they asked us to, when we've never even obtained receivable circularization? So, what's the essence of us agreeing the receivables listing to sales ledger?
Okay, so it's pretty much just an audit procedure just to confirm that, you know, the receivables, the age receivables, the receivables list that you have agrees with the sales ledger. So what you should know is that a receivables listing can just be a list of all the receivables balances at the end. So you have things like, oh, Bola, 100,000, the 200, right? So it's just going to be a breakdown of the total list. Now, the sales ledger, on the other hand, the sales ledger is all part of the company's accounting system. So you have the ledger fills into the general ledger, and then you have the trial balance, you have so all of those things. So agreeing it to the sales ledger just helps you confirm that, okay, this is also what would be on the financial statement. So that's pretty much the purpose of that exercise. So it's pretty much one of the things you can do before you carry out a circularization letter. Now, what you should know is that because the examiner is going to give you 4 marks, so if you say any 4 out of all of these, you're going to get the mark. So even if you don't say that in your own answer, it doesn't mean that you will not get mark for all the correct ones you've said. Okay.
Please, I have a question. I just want to
Please
confirm
go ahead.
when you were explaining, you said that the letter does not have to include the amount of receivables that you want to confirm. But is it safe to
Yes.
say that applies for just positive secularization? Can you do that for negative as well?
Okay, good question. No, you can't do that for negative because you are telling the customer to confirm, to respond to negative circulation only if they disagree with the balance. So you must put the balance there that they are going to have to agree with. So if you leave it blank, then there's nothing for them to check to check if they agree with it. So you can't do that for positive. So you can't do that for negative. You can only do that for positive. Okay. Any more questions before we move on? Now let's move on. Now the next question says, describe substantive procedures. Now this question I particularly want to use it to highlight things and to help you guys understand some procedures, how some procedures are relevant to some areas of the financials and how some of them are not. So it says describe substantive procedures other than receivable circularization the auditor should perform to verify each of the following assertions in relation to dashing codes revenue and receivables. So you have accuracy, valuation, and allocation, completeness, and then you have rights and obligation. So let's have a go at this procedure. So one thing I want you to see here is that you're going to be looking at, procedures, that help you target these assertions. And the way the marking guide is, you're going to get 2 marks here, 2 marks here, 2 marks here, and in total that's 6 marks. So you have to make sure that your procedures are targeted at these assertions. Otherwise, you're not going to get mark. So this is important because in the exam, examiner will sometimes do these things where they're giving you questions that are for particular procedures. So you must make sure that your procedures are addressing those assertions. And what you should always know is that most times somebody just carry out procedure for the sake of carrying it out. Most of the time is always to confirm there's always something in mind you're trying to achieve. So you should always think about that too. Okay, so let's have a go at this question. So you can choose anyone that is easy for you. If it's completeness you want to do, if it's right and obligation, if it's accuracy, valuation, and allocation. Say that again. Please, Victoria, are you saying something? If you're not saying anything, please
Sorry,
mute.
I didn't know I was unmuted.
Okay, no problem.
Okay, but
Okay, so I can say that I'll
Who is
go for
talking now? Is
accuracy.
this okay? I
This
thought it was with
Olamide.
you. Okay, Olamide.
Yes, I'll go for
Please.
accuracy, valuation, and allocation.
Okay, go ahead.
Okay, so I can say that we should review after date cash receipt. So to maybe to check if any payment has been made, if any payment has been made, and we can examine or inspect each receivable balance for old moving or for old balances or old moving items to know if they are likely to be paid or be written down. That's the two that I have in mind for now.
Okay. Even though I can hear you, but I wasn't sure I picked up everything. So okay, I have Bukola. Bukola,
Okay,
go
so
ahead.
I'm going to talk about completeness though.
Okay, completeness. Go ahead.
Okay, so the auditor, this is to check if all the transaction amounts have been captured, the actual receivable amount, if everything has been captured by the
Okay.
auditor, and this can be achieved by looking at the receivable balance that was gotten from the auditors. I mean, from the clients rather,
Receivable balance.
and
I was
no,
going to
from the
say receivable
clients.
balance I was getting from what? Okay, okay, go ahead.
The receivable balance gotten from the client and what we have in our GL.
Sorry, that procedure, I don't understand it. Receivable balance gotten from the client and GL. So what are we going to do with it? So what procedure are you performing on it?
Okay, so it's just to vouch that you've recorded the complete transaction amount.
Okay, okay, okay.
Hi Joel, can you hear me?
Okay.
Yeah, go ahead.
Okay, so I
Can
think
you
I
hear
would
me?
just like to brush up what she said to help out smoothing what she said.
Okay.
So like for
Yeah,
completeness, when
smooth
you
that out.
obtain the detailed listing of receivable balances, you agree it to the GL balance to ensure that the total amount of the detailed listing has been captured in the GL.
Okay, so isn't that, are you checking for
Mm.
accuracy or valuation? Doesn't that look more like valuation to you?
Okay.
I
Let
think
me.
when you're comparing from the listing to
See, hold on.
GL.
So when you're checking for completeness, you're more concerned about if some
The
transactions are
invoices.
missing. So you'll be carrying out procedures that help you do that.
Yeah.
So I have
But
Odumaya, you've been
yes.
trying to say something. Please go ahead.
For the completeness, what we're going to do is to obtain a sample of invoices through whatever sample
Okay.
technique that we're using, and
Mhm.
ensure that it is recorded in the sales ledger, because it's the
Okay.
sales ledger that will reflect in the receivables balance. So that's
Okay.
just
Well,
what we're
is
going
it
to do for
is it is it is
completeness.
it the sales ledger that reflects in the sales balance, or the sales ledger, the sales transactions that were yet to collect money for?
That we're here to collect money for, rather. So that's the receivables
Okay.
balance. So we're going to obtain a sample of invoices and trace it
Okay.
to the list of receivable balances to ensure that we captured it correct. No, to ensure that we captured it completely.
Okay.
That's just
Okay.
it.
That's
Yes.
that's that's a good procedure. So the way I would have worded that would have been, I can obtain a sample of sales invoices, that was
Right.
issued prior to the end, and you can trace to sales ledger, to confirm that it is included as part of the sales balance as at the end.
Yes.
And
Yes.
you should include that for the ones that have not been paid, because if they've paid it, it will be part of sales ledger anyway, whether or not they paid. So
Yes.
you need to understand the relationship between sales and receivables, right?
Yes.
Everything
Yes.
inside receivables must always be inside sales ledger, right?
Yes, but not
But
everything in sales will be in receivables.
nice, correct. Correct. Exactly. Okay. Do you
Okay,
have
so
another
Mr. Joe,
any
if
other?
that is it, yes, on this
Yeah.
point that Odoayo raised and your response. So if that is it, why are we picking samples of invoices? I thought that we'll be taking samples of invoices that are yet to be paid, and to be able to agree, I mean, to be able to ensure that it's reflected and captured completely in the receivables ledger. Because if, for example, if the
Okay.
invoices
So
we paid are invoices that they've already paid,
Mm.
okay. So
Exactly.
that's a
Yes.
good
Yeah.
point. So
Okay.
so you could certainly have added that too, for so you can look at for a sample of receivables balance as at the year, or rather for a sample of invoices at the end that are yet to be paid, you can confirm, its inclusion in the sales ledger. So what you should know is that every sales invoice will be in the sales ledger, right? But whether or not it is still a receivable at the year end is a question of whether or not it has been paid, right?
Yes.
So you even just checking the sales invoice and checking it to the sales ledger and to confirm that it's included
Yes.
as part of, it's still not the wrong procedure, right? Because the way it works is now when the transaction happened first, you're going to credit your sales and debit your receivable, right? So
Yes.
essentially there are two entries in your book. So it forces the receivable. Now when the payment is made, right, it now happens between the
Yeah.
bank and the receivable, right? So at
Yeah.
that point, you're going to debit your bank and
Credit
credit
your
receivable to show that that
receivable.
balance has now been paid off.
Has
Yeah,
been paid
so
for.
you still be able to see that in your sales ledger.
Yeah.
Okay.
Mm.
Okay.
So it's safe to
Do
say
you
you're
have an
agreeing. Yes.
Yeah, but somebody
Hello.
wanted to say you're agreeing what? Go ahead, please.
Yeah. Yes, I wanted to say it's safe to say that you can agree the sample of unpaid invoices to the sales and receivable ledgers, right? Because I'm
Agree the
thinking
sample
that
of
what
paid
we want
invoices
to
to the sales.
confirm. So
Yeah.
what I'm
That's a
thinking,
good procedure.
okay, because I'm thinking that since what we want to confirm is the receivables balance, if we're comparing it,
Mm-hmm.
checking it in the sales, I get that it should be there, but it would just it would just confirm that it's there. It may not confirm that it was. I mean, I don't know. It may I don't know. But yeah, I think to be safe, I'll just write it.
Yeah, but the other thing you should always not forget to include is you should always include a sample. There's no way you are going to check all the unpaid invoices at the end because there will be, for most companies, there will be a lot of transactions. So if you forget to add sample, examiner might say your procedure is not complete. So always include a sample.
Well, Elisa,
Okay, so
for
yeah,
um
is this a
agreeing
general?
yes.
Right,
So for
please.
agreeing from the receivables listing to the sales ledger, how is that like testing the completeness? Because we want to
Okay.
test the completeness of the receivables, not like the sales or revenue.
Okay. So that's a good point. Now understand when you're trying to check for completeness of receivables, you're trying to see most time test of completeness, you're trying to see if receivable is complete. So you want to check if there's been omission. So what auditors can do, that's why in this case you always start from the support document. Because what you want to check is it possible that there've been sales that has not been recorded, in a sales ledger and sales ledger, right? So that's why you take a random invoice, you trace it to the sales ledger, right? So if it exists in the sales ledger, most likely to exist in the receivables ledger as well, right? Because there is a connection between sales and revenue, right? That's why you can trace it to those ledger, and that's why it's a valid procedure.
Okay, so what of working it back,
Okay.
like agreeing balance from the sales ledger to the receivables listing?
So agreeing the balance from sales ledger to receivables listed.
Individual sales
Right now,
ledger.
again, I understand when you agree balances, you're more doing more valuation in that case, right? So if you're agreeing balance, so for example, you know that these are two different documents from two different sources, and you know that the balance should agree, right? So that would help you, with valuation, right? And to some extent, it might help you with completeness as well, because it now means that, if the balance don't agree, you can now see that, maybe something is missing in one of those documents, right? So yeah, so that would still be a good procedure.
So how about when we agree the goods dispatch notes to the sales invoice, and trial balance and draft of financial statement.
Yeah, that's a very good procedure as well. The only thing you should always remember to include in those things, always include a sample, right?
Sample.
Because yeah, you can always, and that's a very good test because those are really the tests that help you discover omissions from accounting records. Because most times completeness is targeted as is something missing. If our total receivables, for example, is $1 million, should it have been 1,001,000 or 999? So the way you try and do those things is to look at support documents, take a sample of transactions, try and trace to see if they are included in the, in the accounting records, if they are included in the, in the sales ledger or the receivables ledger, and that will help you confirm that, okay, it's inside. So if you trace it and you see there, so let's say you take a random sample of 5 transactions and you trace all the 5 and you can find them in the ledger, then it gives you confidence that, okay, this receivables balance is complete. Okay. Okay. Victoria, have you said something? Or you have forgotten your hand is up?
No, not yet.
So I was going to talk about
Go ahead, please.
valuation.
Okay, I was going to
Hold
talk
on one second.
about.
You're going to talk about what?
Okay, I was going to talk about accuracy, valuation, and allocation. But I guess someone
Okay,
has
go
already
ahead.
explained. Okay, so
Okay,
I would
they have said,
discuss.
I thought they have said the procedure you want to say.
Yeah, but I don't think anyone talked about allocation or valuation.
Okay, so what do you want to say about it? You have the floor.
So apart from
So do you have
I
any
could
procedure
also
that you want to? Yeah.
okay, I could also inspect customer correspondence for slow moving age balances and also assess the invoices that are in dispute and also assess whether there is a need for allowance where necessary.
Yeah, that's a good procedure. That will help you with valuation, right? Because most times when you're doing valuation, you're checking if the value. So if you say your receivables is $1 million, is that 1 million? Are you going to collect that $1 million, right? Do you need to make a provision against it? So that's a good one. Okay. Any other one? So I've not gotten any procedure on right and obligation. I think I've gotten some on completeness.
So how about for accuracy, valuation, and allocation? How about we say maybe we should obtain, confirm, no, maybe written representation from management to confirm the maybe the completeness of receivables.
You want to obtain this from manager to confirm the completeness of receivables. Are you going to use that? Is the allocation you want to confirm with completeness? You see how you have mixed up the procedure. So please try and avoid this in the exam. Then when I was grading somebody's script, I saw somebody saying the auditor should. Please avoid saying those kind of things. Just go ahead and say the procedure you want to say. You can start with obtain, review, recalculate, all of those things. And I found somebody doing that under audit risk question as well. You don't need to say the auditor should do this, right? So I thought, that's one thing you guys should know. Bumi.
Okay.
Inspect. Steer in cash receipts.
Thinking about reviewing receivable listing alongside with the acknowledgement copies of invoices sent to the customer.
Sorry, take that procedure again. Your voice wasn't very audible.
Inspect.
Right. Okay, I said.
Good, I have two people talking. Can
Hello?
you hold on? Who is talking? Can you hold on, guys? Oh, your network. No, I can hear you, Bumi. You're the one I asked to talk now, but somebody else, I could hear somebody else's voice. Okay, go ahead, Bumi, please. Nobody else should talk for now.
Okay. All right. Okay, I said, can we review receivable listing to sales invoice acknowledgement by the customer to confirm right?
review the sales listing
Does that?
for sales.
Yeah.
No, my brother, this is your procedure. I get a CV. Review the sales listing.
Yes, actually, let
To
me tell you that. I
maybe
was thinking
your
about
network too
the
is also not
sales.
helping for me to hear what you're saying. So there's a bit
Oh
of
my.
a delay or something. Yeah, but go ahead, just say it again.
Okay, I was thinking about reviewing receivable listing
Mm-hmm.
to customers, the sales invoice, the acknowledgement copy of the sales invoice sent to the customer.
Mm-hmm.
So can I talk
To
So
be
about
what
sure
assertion
customer
does
is
that help you what does that help you? Which assertion does
uh,
that help you confirm?
right, like that you have rights to it since the customer have acknowledged the invoice sent to them, so which means you have the right to the receivable.
Receivable. Okay. Okay. That's not a very good way to word it, yeah. Now I understand what you're trying to achieve, but that's not a very good way. And I can tell you, different ways to word that. So understand that when
can I
you're
talk
trying
about
to do
the rights and okay.
okay, go ahead. Go ahead.
Okay, this is just adding to
Who's
what you
talking?
said because you mentioned Rosemary. This is adding to what you
Rosemary.
said
Okay.
because you
Okay.
mentioned the fact that the customer has confirmed receipt or has received the invoice. So there's a right to the proper to the goods. I will talk about the management aspect. That's you inquire from management
Mm-hmm.
whether to inquire from management the ownership of the goods, or if it's a loan that was given to a customer, the loan agreement, you get a copy of the loan agreement to confirm that the customer was given a loan. So it's kind of like an evidence to confirm that there was some agreement between the company and the customer, or management and the customer. Then,
Let me
and
ask you a
also,
question. Hold on. Why are you bringing loan into receivables balance? Is customer collecting loan
okay,
from company?
okay, it can be goods received. So there should be a correspondence between management and the customer. Um, um, Discussing about the correspondence to be about the goods delivered to the customers. The contents or the minutes of their board meetings would also reflect goods delivered to the customer. So there, you need to inquire from management the rights of the goods, whether the goods were delivered to the customer, and review the board minutes to see if there was any correspondence
Rosemary,
between the customer
Rosemary,
and management.
all these your procedures, you are going too far, and again, for everybody and Rosemary, avoid. So sometimes some of you write procedures in the exam that by the time the examiner looks at it, he will just give you 0.5, right? And the reason is because you're not being spot on, right, per se. So whenever you're thinking of procedure, think of what am I doing? What am I trying to confirm? So essentially, what document am I looking at? What am I trying to confirm? So let me give an example. For this rights and obligation, what are you trying to confirm? You want to confirm that the company has rights to those receivables, right? Obligations will come in if it's a liability, but we're not looking at liability here, so we'll just focus on rights. So I want to confirm if the company, this receivable actually belongs to the company and they've not sold it to a third party or something like that. So what documents would I be looking at? Now, Bumi was trying to use that, but unfortunately, he wasn't saying it well. So one of the things I can do is I can review a sample of invoices or customer invoices as at the end, and confirm that the name on those invoices, is that of the company, right? Because what you're trying to do is that you're really trying to confirm that this customer actually owes this money to this company. So invoice can help you confirm that. Now, another thing you can look at is you can also review, your bank confirmation, for any indication that the company has sold their receivable, to a factor, right? And if you've done financial management, factoring. Factoring is when a company can sell the right to their receivable to a financial institution, and then the person pays them upfront, and they no longer have right to that receivable, right? So you can also review minutes of the board to help you confirm that too, for any evidence that the receivables balance as at the end has been sold to a financing institution such as a factor. That's a valid procedure, right? So you should always, consider, those kind of things, and always look at, what things can you do exactly that can help you confirm some things. But if you start looking at a lot of things, you're saying things, and you can't put them together, it's most likely the examiner or the person grading it will be lost. And also, if you read procedure, that's why I always encourage students to practice, right? When you practice, you see the examiner's answer, you know what is sort of expected of you in the exam. So by the time the ones you are writing, even you are lost along the line, is most likely the person looking at it will be lost as well. Okay, so because of our time, let's move on. So let me show you guys some of the procedures that you could have come up with. Now, you don't need more than two procedure in each of them, right? And so even though what I'll show you have more procedure under each of them, in the actual exam you don't need more than two. So this one is just for preparation sake. Okay. So now under accuracy, you could review after date cash received and follow through to pre-year end receivables balances. So I wanted to say this for some reason, it skipped my mind. So now this procedure is testing, remember you have receivables balances at the end, and this is very good for valuation, right? So what you're doing is you're reviewing post-year end. So when we say after date cash received, we're saying post-year end cash received, right? We'll check payments that are received into the bank statement post-year end. We'll now trace them back to the receivables balances at the end and to confirm it is included. That really does help us confirm valuation. Okay. Inspect the age receivables report to identify any slow-moving balance. Discuss this with the credit controller, the credit control manager, to assess whether an allowance or write-down is necessary. So somebody talked about, making an allowance. So this is always a valid procedure when it comes to valuation, right? And like I explained, if it's 1 million, you want to be sure that this 1 million, you're going to be able to collect them. So if you're not going to be able to collect that 1 million, so you might need to make a provision for maybe the 100,000 you'll not be able to collect. Okay. For any slow moving or age balances, review customer correspondence to assess whether there are any invoices in dispute. So this is also a very good procedure where you might have some old balances, right? And the customer is not paying them. It's been 6 months, it's been 1 year. You might want to check if that balance is in dispute, and whether or not the customer is still going to pay that invoice. Okay. And review board minutes of dashing code to assess whether there are any material disputed receivables. So again, these conversations always come up in board meetings. So you can always, look at the minutes of the board. And for completeness, you can select a sample of goods dispatch notes from before the year end, agree to sales invoices and to inclusion in the sales ledger and year end receivables ledger. Okay. So we already established the relationship between the sales and receivables ledger. So now if you dispatch goods as a year end, from the moment the company dispatches the goods and the customer acknowledges the goods, the company is already entitled to the receivable, right? So so you can look at the sample of sales dispatch from the end, agree that there's a sales invoice and their inclusion in sales ledger and receivables ledger. So that will help you confirm completeness. This test can also help you confirm cutoff as well. It's a very good procedure because so for cutoff, you might just add that, transact those things. You can look at the last good dispatch note, post and pre-year end, and then you can trace it to the sales ledger and the receivables ledger to ensure that they've been recorded in the correct accounting period. Okay. Agree the total of receivables ledger. I agree the total of individual sales ledger accounts to the age receivables listing and to the trial balance. So the key thing you should know here is you're looking at individual sales ledger accounts. So you're looking at individual customer accounts, you're trying to agree them. So you can just take a sample and you're checking the total, agrees with the total on the age listing and the trial balance, right? So that's also another procedure. Obtain the prior year age receivables listing for significant balances compared to the current year receivables listing for compared to the current year receivables listing for inclusion and the amounts due. Discuss with management any missing receivables or significantly lower balances. So this procedure is a bit of an analytical procedure where you're confirming prior year receivables with current year receivable, and then if you see anyone that has significant difference, you can investigate them. Right, so that will always help you confirm completeness. Review the sales ledger for any credit balances and discuss with management whether this should be reclassified as payables. This is another very good procedure because most times in practice, when you look at a company's receivables ledger, you will see some balances that are already that have moved from debit to credit. It now shows that you are now owing the customer, right? In that case, you need to discuss whether or not those ones need to be reclassified to accounts payable. Okay. For rights and obligation, we can review bank confirmation and loan agreement for any evidence that receivables have been assigned as security for amount owed by Dashing Co. So these are another very good, procedures, right? So if a company has maybe given their receivable as a security, as a collateral, right, you can check that to bank confirmation or any loan agreement that the company would have. Also, board minutes, review board minutes for evidence that legal title receivable has been sold on to a third party, such as a factor. So some of those things always come up in the board meeting, and the board always have to approve those kind of decisions. And for example of receivables, agree the balance recorded on the sales ledger to the original name of the customer on the sales order or contract. Okay, so in practice, most times sales transactions will either start with an agreement, all right? So there'll always be a contract, for most sales transactions. For those ones that don't have a contract, most times there will be a sales invoice and a sales order. So that can help you confirm that the company, the receivables actually, belongs to the company. Okay. And does anybody have any question before we move on? Any questions? Everybody understands the procedure.
So I just want to confirm
From my
this
side.
age receivables listing bit. For some reason, I think my network. Or I'm not seeing what's on your screen, but it sounded like there's a chance that some balances will be omitted from the listing. I thought it was just the listing that was used to perform the analysis.
Okay, so now again, like I said, so these are two different documents from different sources, right? So when a company is posting transaction, right? So a company that uses an ERP, the reports will certainly always be the same most of the time. But again, auditors just always still like to check from those two different sources just to see, right? So most times a listing is always a breakdown for receivable balance as at any point in time. So in this case, we'll be looking at the year end. As at the year end, so what is the receivables balance? Right, so you look at that. Now, you're not tracing it to your sales ledger, your trial balance. It's just a way for you to confirm if, those balances you have on your listing also agree with the balance on the ledger. Okay, so because they're like different documents from different sources, so auditors always just check them against each other just to be sure that they're saying the same thing. Okay.
Okay, thank you.
So, sorry, I want to
Right.
ask a question concerning this rights and obligation, the first point. So, is it that they are saying that whenever they receive maybe money from their customers, then the bank should take it, or was the first point?
Okay, so let me tell you what happens in practice. So, sometimes, right, a company might take a loan from a bank, right, or any financial institution, and part of the condition of that loan is that their receivables account, the bank account they use to collect inflow from customers, must be domiciled with the bank. Okay, so that's why you're checking bank confirmation. So where the receivables is domiciled with the bank, and then the company has collected loan from the bank, most likely the receivables balance, the bank has a lien on those balances in the bank accounts on the receivables that is coming. So that's why and the agreement will say that too. Most times the loan agreement will say that the bank has the right to collect those receivables balance in the event that if the company defaults on the loan repayment. So that's why this is a very good procedure that will help, that can help the auditor confirm that the company still has the right to their receivables, so whether or not they are already in default and the bank has already taken over their receivables balance. Okay.
Okay, thank you.
Right. So let's move on to the next procedure here. So this one says describe substantive procedures the auditor should perform to confirm the redundancy provision at the year end. Now, when it comes to redundancy provision, the standard that should come to your mind is IS 37, which is provisions, contingent liabilities, and contingent assets. right? And this is for 5 marks. So examiner wants you to give five procedures. Now, the story about redundancy provision is here. Now it says that at the planning meeting, the finance director of Dashing Co informed the audit engagement partner that the company was closing one of its smaller production sites, and as a result, a number of employees will be made redundant. A redundancy provision of $110,000 is included in the draft financial statement. Okay, so now, what are the redundancy provisions that we need to carry out for 5 marks? So for 5 marks, it means you need to state five procedures. Oh, no, go ahead. Please, if you're not talking, please mute yourself.
Yes, a procedure that we can carry out is to inspect the minutes from the board meeting where they discuss the redundancy provision, because it seems like a substantial amount of money. Not only is it substantial, it is also a major move for the company. So there's no way they won't discuss it at the meeting. So that should be inspected. Okay, that's just one point on my side.
Hold on. So now the other thing, your procedure is just missing some things. Now, if you see review minutes of the board where they discuss redundancy provision.
Yes.
So if they discuss it, what are you confirming?
Okay, yes.
Are you confirming that
the
redundancy exists, or so it's more easy trying to confirm that there's an existence of the head. So you need to add that to your procedure as well.
I didn't round it up
Exactly.
properly.
Well, it's a very good procedure.
Yes, but I want to finish it so that we can know what we're trying to get from the procedure. So the minutes of the board meeting discussing the redundancy process should be reviewed to prove that the amount was agreed upon. I don't know. Does that make sense?
Okay, so let me just reword it for you. So one thing you could have said is you can review minutes of the board to confirm the existence of the redundancy, and of course, so you can do that so that you can confirm that that the company is really shutting down, that there's been an approval for the shutdown or the closing of the production site, right? And to confirm that the redundancy provision exists, or the redundancy exists essentially. So that's one way you can put it. Now, one key thing is, so let me explain something around redundancy provision. Now, for a while now, there wasn't, IS-37 was silent around redundancy provision, right? Before the standard was now revised. So what happened then is companies were abusing, this area of the standard, where a company can wake up today at this year end, maybe they've made a lot of profits. They will say, okay, we want to close down division. Then in the following accounting period, so they will make up, you say they want it, and then they recognize the provision, maybe to reduce their profit. Maybe they've seen that next year they might not make a lot of money. Then in next year, they will say, okay, they've changed their mind, they're not closing the provision, the division again. Then they reverse the money, right? So it impacts on the C&L. So what the standard now said is that before you recognize a redundancy provision, there are some criteria that must be met. One of them is that you must have formally communicated to the plan to the affected employee, right? And it is unlikely that you're going to have to, reverse that decision. And number two is you must be able to estimate, the amount you're going to spend, to a reliable extent. So, and those are some of the things you can, state procedures around as well, in this exam. Okay.
Yes, about that point that you said that they must have informed the staff. I want to what's the word? To buttress on it, that it has to have been that the staff must have been informed before the year end. You cannot say that you inform them after, but you want to make the provision before. They have to have been informed a few weeks before.
Okay, so let me explain that so that everybody also understands. Okay, so let me explain what Odaya is saying for everybody understands. So the criteria is that before you make a provision, you must first have formally communicated your plan to the affected employees, essentially the labor unions. Everybody should be aware. Now, you are not required to recognize a provision until you've taken these steps, and until you're very certain that you're going to incur this expenditure, right? But where you've not formally communicated, there are no indications that you're going to really close the division. You are still contemplating it. At that point, you shouldn't recognize the provision. But at the point, maybe when the board approves it, you formally communicate it, at that point, you must recognize the provision. So if all of that happened before the year end, you recognize the provision, before the year. If it happens after the year end, then your provision will be after the year end as well. Right?
Yeah.
So that's the
And
key
in a
thing.
situation like that, do we say that we disclose it in our books that there's a possibility? So it will just be in our disclosures.
So
is it not?
So the thing is, at the point before you formally communicated it, so you might have what we call the contingent liability, right? But you don't have the obligation yet. So it's still contingent. But at the time you formally communicated, the board approved the plan, and you've set the target date to shut down. At that point, it becomes a provision, and you must recognize the provision from that date. So if you did that before, if you didn't do that before the year end, then as at the year end, you just have what we call contingent liability. But if you've communicated before the end, then you move from contingent liability to a provision, and you should recognize it as such in the financial statement.
Thank you.
Okay. All right.
Okay, I want to confirm something, Mr. Lumide.
Okay.
Sorry. Yeah,
Go ahead.
so
My name is
can
Joel.
we take
This is not
the
Lumide.
fact that it has been documented in the minutes of the board meeting as communication? Like, you're saying that they must have announced it to those that would be affected. And I don't expect that they would go and, well, I don't know, that they would ask the, let's say, expected affected individuals. So is the confirmation from the board going to stand as
have to
that?
communicate to them. The communication from the board is just a board approval, which is also an important audit evidence. But that doesn't replace the fact that they need to have announced it to the affected employees. Okay?
Yes, I agree that they would have announced it, but I'm saying that they should have announced it rather. So I'm saying, how does the auditor confirm that announcement has been done? Do they talk to the persons that
you can confirm through mail correspondence?
Nice.
Because something like that,
Thank
it has to be official. It's not just by grapevine. It has to be communicated officially to the affected parties. So you can ask for copies of the mail correspondence, or you can ask for copies of the letters that were signed out and signed by the employees that are affected.
Okay, thank you.
Exactly.
Thank you.
Another way you can communicate, another way companies communicate that is first, when they want to make a decision, they will first communicate to the labor union, because if they don't, labor union can frustrate their life. So most times there might have been an official letter that is written to the labor union of the organization, announcing that redundancy and how the company is going to compensate them. So as an auditor, you can request to see that letter as well. So evidence of communication to the affected employees can come in any way. It can be email, correspondence, letter. It can be anything. Okay, I have like 3 people stand up. I have Bumi, I have Doyin, I have Victoria. So I think Doyin and Victoria has been, the hands have been up. So Doyin, go ahead, and then after Doyin, Victoria can go ahead.
Okay, so this is Olamide. So
you need to just rename this thing to Olamide, because you are going to keep confusing me at the end of this class.
Okay, sorry. Okay, I would say that a performance obligation would be met. That means we can obtain written. Can you hear me, sir?
Loud and clear. Go ahead.
Oh, okay. Okay, I can say that, okay, we can obtain written representation to confirm the completeness of redundancy provision.
Yeah, that's a very good procedure. So obtain written representation from management, to confirm redundancy provision, to confirm completeness, they've not omitted anything, Go ahead.
Then I can say that, okay, we can also review the disclosure for redundancy.
Oh, that's a good procedure. I've been looking for who could mention that procedure since. Okay, so go ahead, review the disclosure.
For redundancy provision to assess whether it is in compliance with the applicable standard, which is IS 37 provisions, constituent liability and constituent assets.
Nice. Good one. Good. Okay. Victoria. Okay, you have said all the things Victoria want to say. We go ahead.
Exactly.
I didn't know
Let
that I
me
know
just
you had
question.
again. I know you had disappeared.
Well, she said what I
Go
wanted to say
ahead.
to, but I think we can discuss with management on the basis for the 1,000. I mean, 110,000 provision for the redundancy provision.
Okay, that's a good procedure too. So, well, instead of discussing the basis, so it's your procedure should probably be to obtain a listing of the to obtain the list of the breakdown of the 110,000 redundancy provision, and then maybe you can cast it to confirm accuracy, right? And then you can also confirm individual breakdown to supporting documents, which would be like the basis, the calculations. You can also evaluate or review the basis or the assumptions to confirm reasonability. So that's something you can also do.
Sir, is
Oluwatomi,
it
yes.
we use? Sir, is it compulsory we use
Is it
these
what?
words like cast, recap? Is it compulsory we
My
use
brother.
words like cast? Can't we like recalculate or calculate?
Okay. Well, recalculate is also fine. See, my brother, I'm happy you asked that question. You see, examiner likes it when you use all the terminology. You cannot use layman English in this exam. So that's why it's important you use those terminologies, right? So you can use recalculate. Well, cast is the better one because that's another terminology. So, but you can use recalculate too, it's fine, right? Depending on what you're saying. But anytime you're trying to check the accuracy of something, you can cast it.
Okay, so what's the difference between casting and recasting?
Casting and recasting, casting and recalculating.
Sometimes I see in the exam kits recast, some I see cast. Sometimes they use the two words together.
Is terminology. Recast means you are re-adding it. Cast means you are re-adding it. So it's I think it's just English. It's not it's the same. But there's a difference between recalculation and reperform. Recalculation means that you're recalculating a figure. So for example, now maybe interest on loan, you can recalculate interest on loan. But when it comes to like a bank reconciliation, you're not going to be recalculating bank reconciliation. You're going to be reperforming it. So if you're trying to redo your own bank reconciliation from start, to be said that you're performing that procedure. But if it's just a straightforward calculation, you're just checking, you can recalculate, right? And that is different from casting as well. Casting means you're just adding up figures together. So if you have like 100 figures, 100 transactions that make up the total, you can cast it. And sometimes you can use audit computer assisted audit techniques. You can just put it, you can just recast and we add those figures together to be sure that they give you the total that it currently has. So that's another procedure. Okay. Now, so this question does not restrict you to any assertion. So anything you said would have been valid here, and it would have been, allowed in the exam. Okay. So,
Sorry, Joel.
Yes, please.
Joel, why are you saying that
I can hear you.
the provision is not restricting us to any assertion? I thought provision was a type of transaction, and transactions have their own assertions that you work with. Please, can you explain?
Okay, that's a good question. Now, when I say you're not restricted to any particular assertion, it means that examiner did not tell you to focus on valuation alone or existence alone. That's what I mean, right? So when it comes to, yeah. So go ahead.
No,
so that I can
please
answer
go
your
ahead.
question, Larry. So when it comes to financial statement, okay, can you just go ahead so that we're not interfering with what each other wants?
Yes, let me just say what is in my head. Okay, so what you're saying is that what you mean by we're not restricted to any assertion is that we're not restricted to any assertion within the transaction assertions of statement.
Yes.
Wait, within. Okay, I
Don't
understand.
worry, I know what you want to say. Now you understand. I know what you're saying too. So for everybody else, what she's saying is you have assertions that relate to the period under audit, and you have assertions that relate to balances. So essentially P&L and balance sheets. So yeah, that's what she's saying. So yeah, somebody wanted to say something.
Yeah, I wanted to confirm. Redundancy provisions, wouldn't it be balances like liabilities rather than transactions?
Yes.
It's a balance. Yes,
Yes,
thank you. It's not a transaction.
Yes, it's a balance. Yeah.
Thank you.
Yeah, it's a balance. All right. So Oluwa Tomi Lola. Let me just say Tomi.
Okay,
Your
it's
hand is
fine.
up. Do you want to say something?
It's fine, thank you.
Yeah, I figured.
Yes, can you hear me?
Yes, loud and clear.
So my question is, if you don't know the for example, what we just said, review the disclosure of redundancy provisions to ensure compliance with. So if you don't know standard, we say the relevant standard, still get the points or get like a half mark.
No. So if
You
you don't
understand
know
my
the
question?
standard, yes, I do. If you don't know the standard, you can just say review the disclosure related to the redundancy provision and confirm that it's in accordance with the relevant accounting standard. If you say that, you're still going to be fine. If you know the relevant accounting standard name, mention it. But if you don't mention the number or you don't mention the name, it still won't. Examiner won't penalize you for that. Okay. Okay. Now let's look at what we have here. So discuss with the directors when announcement was made. So we've talked about how that you must formally communicate this. So one procedure auditors can carry out is to, discuss with directors, to confirm the announcement was made prior to the end. So if before year end, agree to supporting documentation. So if the announcement was made prior to the year end, you should agree supporting documentation. The key thing to know is that if the announcement was not made before year end, then you cannot make that redundancy provision. At the most, what you have will just be a contingent liability. Review board minutes for details of redundancy payment. Okay, so obtain a breakdown of redundancy calculation. So you can, because typically the 110,000 would have been as a result of the addition of different figures together. So you can obtain a breakdown of that redundancy calculation. You can recalculate the redundancy provision. You can review post-year end cash book for evidence of payments. This is a very good procedure. So what you can do is to confirm this 110,000 and to confirm the reasonability of that figure. Don't forget that provision is an estimate, it's an accounting estimate. It's not an exact figure of the amount that will be paid, right? This is based on the best available information to management as at the year end. They're going to make that provision. But in actual terms, they might end up paying less or more than what they've provided for. But what you can help you see whether or not the provision they made is accurate or at least is reasonable to a large extent is you can look at, don't forget audit always happen post-year end. So you can look at payments that have been made post-year end. If they are still, if they're in line with the assumptions that was made, or if they're in line with the provision of 110,000 that was made. So that would be a very good procedure as well. Written representation, somebody mentioned this, obtain representation, to confirm the completeness of redundancy provision. And then review the disclosure in the FX, to confirm that it's in line with the relevant accounting standard. So these are key points. These are not, these are key points. These are not, the full procedure. Don't go and write review disclosure in the exam. It's like 0.2 you are going to get to instead of 1 back.
Please, I want to ask a
Sorry,
question.
Mr. Bro, can you take that again? Because I wanted to ask that. So the way that you have just listed them here, is it fine, or we have to flesh it up?
Please, this is not fine for the exam. You have to flesh it up. This is just for me to just.
Thank you for making that point. So I don't get just
Yeah.
straight up.
Please, I wanted to confirm for
Please,
the
Sorry,
reviewing
go
of
back to
the
the slide, sir.
Please, I'm on the slide. Before you confirm, please let me say it again because some of you will not hear me now. Please, this point is like key points. So this is the marking guide the examiner used to grade your score. So anybody can say review disclosure in different ways. In as much as you say review disclosure to confirm it's in accordance with relevant accounting standard, you're fine. Or you can say review disclosure in the draft FS, confirming that is in that. So you can say in different ways, but these are the key things. So this is just the key points. Right? This is not what you write in the exam. Yeah, go ahead.
Okay, so when you're looking at reviewing the breakdown of the redundancy provisions to confirm reasonability, is it for valuation? Like, what's the assertion that we're trying to link that to?
So that's a good question. So now when it comes to reviewing redundancy provision, so it can help you with valuation. It can also help you with completeness, because when you're reviewing it, if you feel like something is missing, it can be included, and also it can help you confirm the total. Don't forget that provisions, by their very nature, it's subjective in nature, right? And it's based on assumptions, based on available information. So that procedure can help you confirm valuation. And it can also help you confirm if something is missing as well, which is completeness.
Thank you.
Okay. All right. Somebody else wanted to ask a question. Nobody wanted to confirm something. Okay. Let's move on. I'm sure everybody is fine. And let's look at the final part of this question. And it says, a few months have now passed, and the audit team is performing the audit field work, including the audit procedures which you recommended over the redundancy provision. The team has calculated that the redundancy provision should amount to $305,000. The finance director is not willing to adjust the financial statement. Required for 5 marks. Discuss the issue. Describe the impact on the auditor's report, if there will be any, should the issue remain unresolved. So, what do we do here? So let me first give you guys a hint on the marking guide. Now you can see that the marking guide is 5 marks. Okay, let me know, because I'll probably start saying the answer in the process. But just know that examiner expects you to, write some things for you to get the 5 marks. Okay, Odunayo, go ahead.
Yes. So we can start by calculating. Let me see. In the question, can I see the question? Did they mention any figures for us? Did they mention maybe net assets, receivable, revenue balance, profit? Firstly,
you are
we need
looking
to
at the figure.
calculate. Firstly, we need to calculate the materiality in the books.
Okay,
From what I
materiality
can
in the
see.
books. So how do we do that?
That's why I said I need to see the question. Okay, let me see. Profit before tax and okay,
Well,
yes.
I'm showing the question now.
Yes, I just saw it. It just came to my screen. My network is slow. So for profit before tax.
Profit before tax is $2.6 million.
Is 2.6
Total assets is
yes,
$18
and
million.
total assets is 18 M. So I think they said profit before tax, the materiality level should be between 5 to 10%. Please excuse me, I've not mastered that materiality part. It's something that I just want to do on the side, because there's a lot of information to there's too much information to now be focusing on small figures. But you calculate the materiality.
Okay, so that is small figures.
Yes.
It's okay.
No. I'll definitely learn it. I'm just saying, like, it's something I'll learn like a day before the exam.
It's not
material
to you. Materiality is not material to you.
It's material. I'm just saying, like, audit is a lot of reading and thinking. So I don't want to put the figure somewhere and then forget it in the exam. So you calculate the materiality. From what I can see,
so
it's
let's calculate the materiality. Okay. So how do we calculate the materiality? What figures are you going to pick?
I think they say for profit is between 5 to 10%.
Yeah, that's the benchmark. That's the threshold.
Okay? Yes, the threshold. So the difference in the provision, you calculate 5 to 10% of it. If it falls between, if that value falls between 5 to 10% of profit, then it is material. You can look at it in respect of total assets too. I think it's 1% to 1%, right?
Okay, so sure. This approach, I can hear you. This approach you're using. This approach you're using is not the best approach. Let me just put it that way. So first thing that I was asking is, how are you going to calculate materiality? So just tell me the figures you pick. Are you going to do 5% times 2.6 million or what?
No, I'll pick 5% times the. You know that they said that they provided 110, and now they are saying that the actual figure is 300 and something.
305.
So the difference between
305
that 305 and 110, I think 105, I mean 205 or so.
is
Sha,
195.
the
Is 19.
195. So, yes.
Mm-hmm.
So the 5% of that 195, the value. No. 5% of that. Sorry. No, that value will compare
It's
it to
obvious
Okay,
you
let
have
me
5%
help
of
you
abandoned
out.
it.
net profit.
Yeah.
Let me help you out.
So
Please
Let
help
me
me.
help
let
you
somebody help
out.
you.
Because
Yeah,
I've
go ahead.
truly not learned.
Okay,
I don't even slide.
you just calculate your materiality based on the PBT. That's the difference between the 110 and the actual provision, redundant provision they've made. So
So be
based
using the
on that,
figure. Be using the figure. The difference is 305. So everybody please pay attention. 305 minus 110,000, which is going to give you 195,000. Now, so
okay,
for the sake of everybody,
195,000.
hold on. Let me just explain
So
that and you take it from there. For the sake of everybody, hold on. Why are we using 195,000? We're using 195,000 because the company management has recognized 110,000. Audit procedure is saying it should have been 305. So from the 305 that the auditor, and remember, auditor is the expert in financial reporting matters, right? So from the 305 that my auditor is saying should be recognized, management has already recognized 110. So the difference, which is what is really a misstatement or a potential misstatement right now, is 305 minus 110, which is 195. Now, whether or not that 195 is material or not, that's what we're about to find out now. Okay, so over to you now.
so you calculate 195,000 divided by 2.6 million. So that will help you to determine
Okay.
if the percentage that then you now compare it to the threshold. So that will help you determine
So
if it is
that figure,
material.
what's that figure?
Give
I don't have
7.5%.
Correct.
7.5,
7.5%. Nice.
it's what how many
7.5%. 7.5%. Is
7.5%.
that
That
material or
that
not?
that means it is material because the materiality
Okay.
threshold for PBT is 5%.
Okay,
So
nice.
since it
Now,
is material, I will
hold
assume
on,
it is
hold on.
material.
Okay, no, you are not going to assume in the exam. You're going to do another calculation again. So your first comment will be that, at 7.5% of PBT, it is material to PBT. Then the next thing
Yes,
you do another calculation against total assets, which is 195 divided by 18 million. And you're also
18
going to
million.
check if that is material as well. So if you
Okay.
do that, you should get 1.1%. So is 1.1%, is it material to total asset or not?
No, it's not material to total asset because total asset is 2%. So it's not
Is
material
it?
to
Yeah.
total.
It is 1 to 2%. It is actually.
Thank you.
Is it 1 to
Please, where
2%?
did you see that? Yes, it's 1 to 2%.
I do.
Right.
Okay, please ask a question. When we have ranges, so you're saying 1 to 2 and someone has gotten 1.1.
Mhm.
How do we deal with it? Like on what basis do you
So,
then say, because, okay, yeah.
if you're looking at materiality benchmark, if they say 5 to 10%, don't go and start your own from 10%. Start from the lower end, which is 5%. So always start from the lower end of the benchmark. That's where you start. That's where you base from.
But
Okay.
sorry,
I hope
sorry.
that.
But in this case, we have 7.5% for
Mm-hmm.
PBT. So it still
Mm-hmm.
falls within the range, within the threshold.
Okay. So your mistake is you are thinking material anything between 5 and 10. That's what's material. So if it's 12 or 20, it's not material. No. So you need to understand
No.
it. It means
No,
that
no, no.
that's what I
If it
said.
falls within 5 to 10, maybe we can still consider it as okay.
Exactly. That's my thought too.
But anything above 10%, then is material.
So
No,
that's
you
why I just
use
told you
the
that
lower
start
range.
from the
That's
lower end.
5%.
Exactly. Please, do you understand this, my
So for
English?
the exam, the
Should
lower
somebody
end, in
explain it?
reality, the range.
Always use so leave reality for now.
So
Let's focus on the exam.
I
When you finish
understand
the
you.
exam, you'll be dealing with reality. Okay.
Wait, that means that
So
it's from 5. That means that if it's from 5% to let's say maybe 5% above, that means it's material, right?
exactly. So when I said use the lower hand, so if your materiality threshold is 5 to 10%, what I'm saying is start your own from 5%. So anything 5% and above is material. If it's 4% is not material, right? And see, when you're doing this calculation, examiner wants you to say what you've calculated. So if it's 4%, you say, oh, this is just below the materiality threshold. It's not material to P&L. If it's 4.9, you will say it is very close to the materiality threshold, right? But it's still not material to, to this thing, to profit or loss.
Round up in fact.
Again, it's neither here nor there. You can choose to round up if you want to round up. Round up to a whole number, it becomes 5%. So that will be fine. All right, but if it's 4.1, 4.2, you can just make a comment that it is just borderline materiality. It's just a little below the threshold. So examiner wants you to do the calculation and also explain the calculation. It's one thing for you to know how to calculate number, but you don't know what the number is saying. So that's the purpose of, of you saying whether or not the thing is material or not. Does everybody understand this materiality thing? Please, in the exam, always take the lower end because the examiner will always do that. Okay, so at 1.1 of total assets, this is material to total assets. Okay, now let's come back to answering this question. So I have some people that their hand is up. So I think you spoke with you. The one that was talking since. Do you want to say something? Hello,
Yes,
do you want to say something?
Yes, and
Is this Olamide again? I mean, you see, I told you, right? I'll just accept my fate.
His one has her display picture, if it will help. AA is Olamide.
Okay, that's a good one. So that one should help me. Okay, Olamide, go ahead.
Okay, sir. I don't even know where to. Okay. Okay.
Start from somewhere.
Start from somewhere because they've already started already. So I would say that since it is material, then we need to modify the opinion. Or we can't. No, first of all, we need to maybe advise the management or advise the finance director? Yeah, the finance director that they should adjust the provisions to be or they should add 195,000 to the 110,000. And if they refuse to do that, then a modified opinion will be adequate due to material misstatement. Then I can say that okay. Okay, I can also issue a qualified opinion because it is material but not pervasive. Then I can say that opinion paragraph would be acceptable. That is the provision is material, but apart from the provision being material, the financial statements present the true and fair view. Yeah, I think that's all. Thank you.
Okay. The only thing missing from the answer is to include basis for opinion paragraph or basis for qualified opinion. Okay. Philip, you have the floor.
Okay, please, you were mentioning that we should use the lower, it's still on materiality calculation. This question. So if we were to use total assets, let's say we're given total assets in this question, and total assets is 2%, right? If we got an answer like 1.5, would that be material or not?
Total assets is 1 to 2%. Okay.
Okay.
So anything that is 1% is material. So total assets is not just from 2% and above. Okay. So that's the key thing. So that's what I was saying, that when you're looking at materiality, you should always start from the lower end. So total asset is 1 to 2%. So if you have a range, now there are some of them that will just tell you 5%, right? So, you know, so PBT is 5%, profit after tax is 5 to 10%. Now, some are 0.5 to 1%. Gross profit is 0.5 to 1%, revenue is 0.5 to 1%. Total asset is 1 to 2%, net asset is 2 to 5%. So start from the lower end of the range, right? And when I say lower end of the range, just start from the lower figure. So if it's 1 to 2%, start your own from 1%. So anything that is 1% and above is material. If it's 5 to 10%, start your own from 5%. Anything that is 5% and above is material. Okay? I hope that answers the question.
Okay, so what about if it's not above the higher head, the higher limit, like 2 to 5%, the 5% is above it?
So, okay, so you give an example of a figure above the limit.
Like 5.6%.
Exactly. So 5.6, that's material. That's above 5%. So if it's 5.0 is above, right? 5.0 is material. 5.1, 5.2, 15, 20.
PBT.
Say that again. What about for what?
PBT, which is 2 to 5%, like you said.
Mm-hmm.
Right? If it's 5% and above, like if the answer you got is 5% and above, is it still material?
So you said the answer we got is 5% and above.
Yes. Like 5.5. I'm using PBT, which is 2 to 5%. Is that 5.6% still material?
I just explained to you now that anything that is above 5% is material. And if we're using PBT, and the threshold for PBT is 5% and above, or 5 to 10%, anything that is above 5%, anything 5% and above is considered to be material. You understand?
Okay. Yes. Okay. What if we got 10.5%? That's what I'm trying to say.
10.5 is material because it's above 5%.
Thank you. I understand it.
Okay. Okay. Would you go ahead?
Okay, I want to ask, can't we use like absolute value? Like for example, if the threshold is 5 to 10% and I'm going for the lower one, which is actually the right one, so 5%, can I say 5% of what's the amount now of PBT? What's the amount of PBT? I think 18 million
2.6
of 2.6.
Okay, no, 2.6 is PBT, yeah.
5% of 2. Yeah, can't I say
7.5
of 2.6? Then I get the amount.
I know what you want to do. So what you want to do is, yeah. Uju, I can hear you. Can you hear me?
Yes, yeah, I'm with you. So if, for example, 5% of 2.6 is about 130,000, I can now say, okay,
Yes.
119,000 is below 130,000, so it's below materiality. Can I use that as well?
Do you say it's below materiality?
It's not material, rather. If it is not 119,000, if the materiality threshold is 130,000, it means anything above 130,000 is material.
Exactly. So why did you not say it's not material?
If the difference, sorry. So if the difference now, the
so
195,000 we're talking about.
Wait. You see why you should not even use this style? The way it's confusing you. That's the way it has the potential to confuse the person in the exam. You know, but in real life, that's the way auditors work.
Sorry. Exactly. Yeah. That's how I do in practice. So I'm actually confused.
I know that's why you're going there. Because in practice, that's how it's so you typically work with the figure. Right, but again, right, in the exam, it's always better. This is the way examiner wants you to do it in the exam, right? But again, it doesn't mean you can't do this when you're saying you can do it, but it has a tendency to confuse you and the examiner in the exam, right? So now, for the sake of everybody, some of you will be lost as you is talking. So what would you saying is, why don't I get 5% of the PBT of the question I'm looking at? So if you do, which is the, anything that we've said, anything that is 5% and above of PBT is material. So for this question, 5% of PBT of 2.6 million is $130,000. Now that means that And in real life, that's the way auditors work. So they can say our materiality for this job is 10 million, or in this case, they'll say it's 130,000. That means if they're looking at a transaction, if it's above 130,000 or 130,000 and above, is material. So that's what she's saying. So since we're looking at a misstatement here that is 195,000, it means it's above our 130,000. That means it's material. So now again, in as much as that is not wrong, or I advise you do it the way examiner wants you to do it, right? You know, the truth is mathematics will still arrive at the same thing, but I would, advise you just to do the examiner wants you to do it, which is to do those calculations, right? Because in the marking guide for this one, you get 1 mark for the calculation and explaining is material, right? So you get 1 mark for it. So that's pretty much the way the examiner wants you to do it, right? Okay, so.
All right, thanks.
All right. Okay, so now let's look at this final question so that we can round up this class. So let me just do a final explanation. Now, if you see a question like this that says discuss the issue, in this marking guide, there is 1 mark for you just discussing the issue here, right? But some of you just overlook discussing the issue. And discussing the issue is you just saying that, oh, management has said redundancy provision should be 110,000. Audit procedures has discovered that it should be 305,000, which means there is a additional $195,000 that needs to be recognized. Otherwise, the financial statements will be misstated. Okay, so that's you discussing the issue, essentially discussing what is giving rise to the problem. The next thing is for you to calculate materiality, which we've done and talked about extensively. The next thing is to discuss the impact on the auditor's report. And, I think it was Olamide that did justice to that. So in discussing the impact of the auditor's report, yeah, you're going to say that, because this is a material misstatement and it is material, but is not likely to be pervasive, right? As a result, the auditor will issue a qualified opinion. So I like the way the Olamide broke it down. She first said they will issue a modified opinion, and under the modified opinion, they're going to issue a qualified except for opinion. And in the qualified opinion, the wording will be that except for the material misstatement on redundancy provision, the financial statement show a true and fair view, or it's complete in all material respect. And then the next thing you must always include that there will also be a basis for qualified opinion paragraph, which would now quantify, which will discuss the basis of the qualified opinion and would quantify the misstatement in the financial statement. Essentially, it's going to say things like, oh, as a result of the material misstatement in provision, it means that profit, and it will say things like, oh, if the adjustment of 95,000 would have been done, profit would have been reduced by maybe 195,000, and retained earnings of total assets would have also reduced by 195,000. Okay. And if you say that, you're going to get the 5 marks that is allocated for this question. Okay, Uju, your hand is still up. I thought you finished saying your point. Do you have something else you want to say? Oh, okay. Okay, so that's pretty much what the examiner will require of you. Now, if management, it's because this question told you that management, the finance director is not willing to make the adjustment, and they told you to describe the impact on the auditor's report, if any, should the issue remain unresolved. Now, if they have told you to discuss impact, if it is resolved, and if management adjusts the financial statement, and if management refuses to adjust the financial statement, then you could have also discussed the other way, that if management amends the financial statement, it means that there is no more material misstatement, and the auditor will issue an unmodified opinion on the financial statement. Okay? Right? And if the redundancy provision were to be so significant that the auditor considers it to be fundamental to users' understanding of the financial statement, then the auditor can include an emphasis of the matter paragraph where the auditor would, draw users' attention to the disclosure in the notes relating to redundancy provision. But in this case, this one is not significant enough for that to warrant an emphasis of the matter paragraph. Okay, Bumi, go ahead. I have Bumi and Olamide is up. But Bumi, go ahead. After Bumi, Olamide can go ahead.
Okay, I have a question regarding this review and reporting. Okay, in the case where imbalance is contained in the statement, what audit opinion will we give?
In the situation
Let
where
me
what?
tell you my an auditor number one maybe cannot confirm opening balances, or for instance, this is a new audit client and you cannot confirm opening balances, or you notice there's a misstatement in the opening balances. What opinion do you think I should give in that instance?
Okay, so that's a very good question. Now, again, so what you're asking is, again, we never know, because for the examiner they like to take things from advanced audits to audit and assurance, but it's more of an advanced audit. In fact, I don't think they will bring it in because there's an ISA called ISA 5110 on opening balances, and really is outside of the scope of audit and assurance. So they won't ask you in the exam. But again, just for knowledge sake, and for just for knowledge, right? If so now, ISA 5110 comes into play under two circumstances. Number one is prior year financial statements were not audited. Maybe the company was a small company, fell under small company exemption, and they didn't require an audit. So last year's financial statement was not audited. And number two, last year's financial statement was audited by a predecessor auditor. Then the auditor will need to apply the requirement of IS1. And IS1 actually has requirement for impact on the auditor's report where there's a material misstatement in opening balance. So your question is, if there is a material misstatement in opening balance, or if, now there are two circumstances, if there's a material misstatement of opening balance, or if auditor is not able to obtain sufficient appropriate audit evidence over opening balance, what will be the impact on the auditor's report? And the answer is, it depends on whether or not that matter is material and pervasive, or it is material but not pervasive, right? So if it's material misstatement or auditor unable to obtain sufficient appropriate audit evidence, if it's material, then that would certainly impact on the current year's financial statement, right? And so if it's material and management refuse to correct it, because if there's a misstatement and management is ready to pass the necessary adjustments, then there's no more material misstatements. But if management refuse to make the necessary adjustment and then it's material, the auditor will give a qualified opinion. If it's material and pervasive, so if it's material but not pervasive, qualified opinion. If it's material and pervasive, then it will be adverse opinion. Now, if auditor is not able to obtain sufficient appropriate audit evidence over opening balance and has no way of being able to obtain that audit evidence, again, it's not a question of whether or not it's material and pervasive or it's material but not pervasive, right? But more often than not, where the auditor were not able to where prior period were not audited by by the same auditor, or if prior period was not even audited at all, the auditor will have to look for ways to be able to carry out audit procedures on opening balance and be able to gain some confidence over opening balances, right? Sorry.
Yes.
Thank you. So typically that's always the implication on the auditor's report. Okay. Do I have any question? Any other question?
I will see you. I will send you a
I'm with
private
you.
message.
Okay, no problem.
Okay, sir.
No
My
problem.
question.
Yeah.
My question
Namidi.
is
I know you
concerning
remember that you are the one.
concerning material uncertainty over going concern. I want to ask what will be replaced? Is it basis of opinion paragraph, or what will be replaced in the auditor's reports?
So your question is not very clear. You say your question is about material uncertainty. You now said what will be the what?
Like what will be replaced in the, is it in the paragraph? Is it opinion, like with basis of opinion paragraph will be
Nothing will
included?
be replaced though. Yes, basis of opinion will still be there. Yeah. MURG, material uncertainty related to going concern, will come after the basis for opinion paragraph. So it's not going to replace anything in the auditor's reports. It's just going to be an inclusion, an addition to the auditor's reports. And the key thing to always remember, which I always have to keep telling students, is what you should remember is that the auditor, you only use MURG under one circumstances, which is there is a material uncertainty related to going concern, and this has been properly disclosed in the financial statement, and the use of going concern assumption is appropriate. That's the only time you're going to include a material uncertainty related to going concern paragraph, and basically just to draw users' attention to that uncertainty, and you're going to cross-reference the notes where management has already properly disclosed the uncertainty that they are facing. And material uncertainty does not modify the auditor's opinion. The auditor is not going to modify the auditor's opinion because of that. Okay. Okay. Do we have any more questions before
when you say that the auditor is not going to modify the opinion, that's because we expect that the directors have properly disclosed it, right? In the event that they did not properly disclose it, would they modify it then?
Okay, so that's a good question. So in the event that the use of going concern assumption has not been properly disclosed in the financial statement, then you're not going to be using an MURG paragraph. In that case, it's going to be a question of material and pervasive or material but not pervasive. So if it's material and pervasive, then you're going to give qualified opinion. If it's material but not pervasive, if it's material and pervasive, you're going to give adverse opinion. If it's material but not pervasive, you're going to give a qualified opinion. Qualified except for opinion.
That table you gave us,
Okay.
Abby. That diagram.
Yes, please. Yes, very, very key. Please, you need to familiarize yourself with that table.
So I'm very sorry. I'm very, very, very sorry. Pertaining to the material uncertainty we're going concern. Sorry, my network was behaving somehow, so I couldn't get all the points that you said.
Okay, so what I said is you use going concern, you use an MURG paragraph. MURG is material uncertainty related to going concern. You use that paragraph only when there's a material uncertainty related to going concern that has been properly disclosed in the financial statement. Okay, and the management has also used the going concern assumption appropriately. That's the time you use the MURG paragraph. And you're going to include the paragraph immediately after the basis for opinion paragraph. Okay.
So what if it has not been like disclosed properly in the financial statements? What would do?
So that one is a ground for giving a modified opinion. So you're now going to check this, non-disclosure of this material uncertainty affecting the company's ability to continue as a going concern. Is it material and pervasive, or it is material but not pervasive? If it's material and pervasive, you're going to issue an adverse opinion. If it's material but not pervasive, you're going to give a qualified except for opinion. Okay?
Okay, sir. Thank you.
All right. In the absence of any more question, we're going to end here today. I'm going to see you guys again on Wednesday, 1st of June, for the mock debrief. It's a 12-hour class from 7 to 9, I believe. Okay. Enjoy your weekend and enjoy the remaining of this Sunday.
So thanks a bunch for the evening.
Thank you.
Thanks, Joe. Bye.
All right, bye.
Thank you, sir.
Thank you, everyone.
Thank you, Joe.
Bye.
Bye.
All right, guys. Thanks.
Thank you so much.
Bye.
Thank you. Thank you,
Bye.
Papa. God bless you.
Thank you, everyone. God bless you too.
Thank you, sir.
Thank you, guys.
Hey, your body water.